Hey, what's going on, everybody? Welcome to another video, and today I am extremely excited to bring you guys the good news that we just got this morning regarding DraftKings stock, ticker symbol DKNG. And so let's just go ahead and get right into it. As of right now, DraftKings is up about 8% in pre-market, and it is absolutely soared after an article came out by a Morgan Stanley analyst who pretty much called the bottom and said, this is it for the stock. This is it. It's come down too low. It's time for this stock to start going to the upside as we see upside. So let's just go ahead and go through the article a little bit. So Morgan Stanley analyst Thomas Allen upgraded DraftKings to overweight from equal weight with an unchanged price target of $31, implying a 60% upside. Allen said that the stock's recent pullback presents an opportunity to invest for the long term. The analyst noted investors should not ignore that DraftKings is a leading player in what will be a very large and profitable U.S. sports betting and internet gaming market. Allen added data from New York's first several days of legal sports betting to remind how big the opportunity is, with the implied market revenue run rate well ahead of Morgan Stanley's previous expectations. Now, before we get into more of the good news, is this not what I have been saying for the last 8 DraftKings videos? I have been saying this. I said that DraftKings has so much upside because the sports betting market has so much upside. I've been saying this. And to all the people who have been fudding DraftKings and coming out with all these crazy conspiracy theories and all these short seller reports and they're spending too much money on marketing and all that, I told you guys they have to do that. Sports betting is a huge industry, and it is going to be a insanely huge industry in the future once we start to get more states legalizing sports betting, which they will. I've been saying this. So it's great to see that a very intelligent analyst agrees with me as well, because I've been saying this for the last 5 months now. But that's great news, and it's crazy how much power these analysts have, because once this one analyst came out and said that, all of a sudden the stock soars, about 8% in pre-market, and who knows how the day will play out. It could do what SoFi did, a few days ago, and it could soar another 8% when the market opens. You just never know with this stuff. So this is all fantastic news, and let me give you guys something else that you probably didn't know. So I did a little bit of research, and what I found was on January 23rd, that was just 3 days ago. On January 23rd, 4 insiders bought more DraftKings stock. Here we go. The chief financial officer, Jason Park, bought more shares of DraftKings stock. The CEO of the company, who we all love dearly, Jason Robbins, bought more shares of DraftKings stock. One of the board of directors, Matthew Kalish, bought more DraftKings stock, and another director, Paul Lieberman. They all bought more DraftKings stock. What does that tell you? They think that this stock is way too cheap at this price, and they're thinking long term. They work inside the company. They know how valuable DraftKings is. They know it, and I've been telling you guys how valuable DraftKings is. Now, don't get me wrong. We all bought pretty high. I started buying DraftKings in the 40s. I get it. We're probably still down, but as long as you've been dollar cost averaging and buying more, you really should be fine for the long term. I mean, that's what I've been doing. And to go back to what this analyst said, that he has an unchanged price target of $31. Okay, let me explain to you guys how these analysts work. Their reputation matters to them. So as the stock price goes down, analysts, you ever notice whenever a stock price starts tanking, all these random analysts come out of nowhere and start downgrading the stock and cutting the price target? They're doing that to save themselves. That doesn't necessarily mean that that's what's going to happen. What they say isn't law. You know what I'm saying? So I'd be careful with these analysts and their price targets, because let's be honest, we all know DraftKings is going to be much higher than $31 a share in the future. Let's just be real with ourselves. We all know it. We've been a part of this game for too long. As a matter of fact, how do you give DraftKings a price target of $31 when the stock was $60 a share 4 months ago? Come on now. You see what I'm saying? Don't always follow what the analysts are saying. Kind of just develop your own thesis. You know what I'm saying? So let me give you guys another nugget of information that I discovered. So the sports betting numbers for Arizona recently came out, and what we discovered was the Arizona sports betting generated $50 million in revenue on $466 million in handle in November. Handle market share was led by DraftKings at 32.4%, followed by FD Sportsbook at 24%, and then BetMGM at 20.3%. Most of you guys know who BetMGM is. And then Caesars with 13.8%. So everything I've been telling you guys about DraftKings is finally coming true. That's the key about this whole having patience thing. You know, I told you guys, there's no sports betting company better than DraftKings. I said that from the beginning. Caesars isn't better. Rush Interactive isn't better. Flutter Entertainment, which owns FanDuel, isn't better. BetMGM isn't better. Wynn isn't. None of them are better. DraftKings is the company. They are going to be the number one sports betting company in the entire world. You've just got to have the patience to wait, because like I said, they're not going to become profitable until like 2025, something like that, maybe even later than that. So it's all about how much patience you have. But I really think that DraftKings is going to be that Tesla story. You know, in 5 years, you're going to start to see articles coming out like, you know, here's how much money you'd have if you put $1,000 into DraftKings back in 2021. You know, you're going to start to see crazy stuff like that, I'm telling you. So I think that's it for now, but I am very happy about today. I knew it was coming. I knew DraftKings was due for a bounce. It's just too great of a company. I keep telling you guys, you can only FUD a good company for so long before a company eventually shows you who it is. So I think the analysts are smart enough to say, okay, we're getting close to the Super Bowl. The NFL playoffs are soon coming to an end. Let's go ahead and get in front of this so we can load up on these shares before the Super Bowl pop happens. So you guys see the game being played here, but you know how I am. I'm long DraftKings. Haven't sold a single share. I will never sell a single share. As a matter of fact, I think I might buy more today. So that'll go ahead and conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe, and I will see you in the next one.